All right, so what's going on in the market this week, man? Portfolios is red, everybody looking shaky, things looking scary out there, everybody worried, everybody confuzzled and all that. What's going on? So in this video, we're gonna talk about the oil prices, we're gonna talk about inflation, we're gonna talk about what the Fed doing, we're gonna get into it all, why your portfolio looking like the Red Sea. But first, before we get into it, you already know, hit the like button, subscribe to the channel. You like the info here, make sure you hit that notification bell so you can get notified every time we upload them. And if you want your free stock, don't forget to click the link down below, man. Get your free share of Robinhood so you can join this investing journey with us and stop sitting on the sidelines so you can start getting this money. So, what is going on with the market this week? The Red Sea has came. We got a little bit of pop in the market on Wednesday and it gave it all back. What happened? So let's get right into it, man. Oil prices just punched the market in the face, man. They saying oil could go up to $150 a barrel, and that ain't looking good, man. Like, anytime it's the geopolitical problems and all that, and we want to go raid another country for their resources and all that. Listen, man, the American people gonna feel it, and we feeling it right now. Well, we ain't feeling it yet, but we gonna feel it soon. So let's get right into it. The biggest driver right now, like I said, is geopolitics. So what's going on? The conflict with Iran and the shipping routes. I never even heard of the Strait of Hormuz before today. Well, before all of this came about. The Strait of Hormuz, the Strait of Hormuz. What is that for the people that don't know? Well, I'm happy you asked. The Strait of Hormuz is basically where all the ships that's carrying all the materials and all of the goods and all that, they got to travel through that strait to get the products to where they need to go. So why is this a problem? Because we are beefing with Iran right now, and they run the joint. They saying whoever, with any of these ships come through here, is on and popping. So don't bring no ships through here. So ain't no ships going through there. So now they got to go all the way around. So it's going to take products longer to get. And when it take products longer to get to the people, all that mean is that inflation goes up, them prices go up. So the Strait of Hormuz, that's I don't even know if I'm saying it right. The Strait of Hormuz, whatever it is, that route, that shipping route it controls 20% of the oil flow for the whole world. So that is a very strong point of why investors are nervous right now, because if that goes into play and like we can't get through there, then they saying oil could go up to $150 a barrel. And that mean basically for me and you, that mean gas gonna be like $5 a gallon. So we can all understand how serious that is. So that's why your portfolio is red. Also, when oil spikes, it's not just oil spiking and that's it. No, it's a chain effect. So when oil spikes, now the airlines get crushed because now they going to have to start doing some shipping and they going to start getting, now that demand is going up, price is going up. Now inflation is coming. Like I said, inflation, because the price is going to have to go back up if the goods and services taking longer to get here and there's less goods and services to go around. And like I said, the Fed gets nervous. And when the Federal Reserve gets nervous, they not really worried about cutting rates. And all of that led into the Dow dropping more than 1,000 points in one session. And that is crazy. That's crazy. That's unheard of. The Dow don't drop 100 points in one session. That's crazy. So energy stocks, they held up, but the travel and the small caps, they took a beating because with the oil prices going up, we already went over how that's affecting all them. So how does that affect the Fed? So the Fed problem just got worse. They was already, if you watched the last video, if you tapped in, you already know the last video. I already explained about inflation and all that, coming in cooler than expected. Now it's hotter than expected. So now with the higher oil, that leads to a higher inflation risk. And what that means, if the inflation goes up, then that means the Federal Reserve is going to delay cutting rates. And then what's going to happen if that happens? The bond yields are going to rise. And then what's going to happen when that happens? The stocks are going to fall even more. Yeah, it is real out there. Like, for nobody who understands it, I hope you understand the atmosphere that's going on right now. It is very real. Like, we are on pace for a recession right now, honestly. We might be in one, honestly, after this jobs report. So, the Treasury yields have already been climbing because the rates, we was already looking for a rate cut. Remember the last video I told y'all, we was already nervous with inflation going up. Like, all right, when is the Fed going to cut rates? Now, it's not looking like they trying to cut rates no time soon. And with this next Fed meeting, I got a feeling Jerome Powell might admit that we're in a recession right now because it's the signs are all there. And what are the signs? The weak economic signals. What is that? The micro data. The job data is coming in softer than expected. I think they said it was like 96,000 jobs. That's a major thing. They tried to gloss over it like it's just a small blip in job. That's not a small blip. 100,000 people losing their jobs. That's serious. Signs of a recession. And also, investors are talking about stagflation. So what is stagflation? Stagflation is nothing when the economy is not growing at the rate we want it to grow at, but also inflation is still going up. So now it's like we're in this point of where the economy is not growing, but prices is going up. Recession. So that's when everything looks like it's going to crash. So also, we see the rotation inside of the market with the small value caps that was outperforming this year and the large caps that's underperforming since the start of the year because all big monies and institutions are taking money out of this AI and they're out of the AI and they're moving their money somewhere else. So the rotation in the market is also a reason why them stocks that was going down, now they're getting pushed down even further because people taking their profits and they're moving them somewhere else to bonds and more safer assets like we talked about before. So the small cap value is up about 8% year to date, while big growth names are negative. The Mag 7, all these companies are down, but the small caps is up. That means that big money is moving because they see what's coming down the line. Also, let's add in the fact that the AI stocks in the market, people still want this AI thing to go. Like, the AI is not going anywhere. Like I said before, the market cannot reach all-time highs without tech. I'll say it again. The market cannot reach all-time highs without tech. So they need tech. So they're moving the money out of the main companies and they're putting them into, you see the Microns running up. You see cybersecurity, CrowdStrike, and Palo Alto had a little bump because they moving them out of the main AI names and putting it into the infrastructure, the stuff that the AI needs, like the energy. You see energy running up. Like, so you gotta understand how all of this plays in to the part of why your portfolio is red today. Your portfolio not red this week or today just because they want to be red. It's a whole lot of stuff going on in the background and it's leading the market to just keep questioning what is coming next. So let's run it down again from the top. What's going on in the market this week? The stocks are very volatile and they bleeding out because oil is surging. Why is oil surging? Because the Strait of Hormuz, the 20% of the world's oil supply is being blocked by all this geopolitical tension because Trump trying to weaken China to go over there and, take over Iran. We'll get into that in another video. I might do a live on that. But because of that, bond yields are rising. People taking their money out the stock market, stocks are falling, and they putting them in the bonds. And the Fed expectation now, we still waiting to see when they're going to cut rates. You see what I'm saying? So all of this leads to confusion, uncertainty, and all of that equals a red market. So, man, the key takeaways, though, is if oil, like we gotta pay this is what you should pay attention to see which way the market is going and what the temperature looking like. Pay attention to oil. If oil can stay above $90, $100, like in that range for a war, that's common. That's cool. That's kind of what if it get past that, we might have to buckle up and get ready for some a longer war than we expect. Because dude said it's going to take 4 to 5 weeks. I doubt that. At the earliest, it's going to take 4 to 5 months. But Russia's still in Ukraine, and it's been 4 years. How about that? So, and the tech valuation we looking at, because if the Fed cut rates, that's going to give people more confidence to start putting money back in the market. And we know most likely a lot of them tech companies is undervalued. We're going to start seeing money flow back into there. So once you start seeing money start flowing back into the Mag 7, then you could start seeing maybe the tide going to change. But we don't know when that's going to happen. And also, we got to watch this war, how this war is going to play out, who's going to win, what's going to happen. And then we can kind of gauge ourselves to say, all right, this is coming to an end. All right, everything is settling down. All right, the Fed going to get rates back now. All right, inflation coming back down. And then we can see where we're going. All of that has to come into play in order for us to be back on the up and up, because it's a whole lot of uncertainty. So if that shipping lane get blocked, you know what I mean? Markets is going to go crazy. It's going to be blood in the streets. But like the OG Chris Sane say, man, when it's blood in the streets, that just means it's time to eat. You already know, man. We ain't worried about no recession. We already went over the market cycle. Like, listen, the market got cycles. Like, I'm dropping that video this week. I'm dropping that video this week on my YouTube channel, so make sure y'all tap in. This ain't nothing but a market cycle. So we just got to go through this decline. It ain't nothing but a bear market, recession, and all that. People going to lose their jobs. Buckle up. You know what I mean? Make sure you stacking your bread up, and make sure you still buying stocks consistently, man. That's all. Buy stocks consistently, and we gonna be all right. So with that, man, I appreciate y'all for being here. This has been another Financial Friday, letting y'all know what's going on in the market this week. Come back next week. We're gonna see what's going on in the market next week. You already know. This don't stop. It's every day, every night thing. You already know. So if you want your free stock, once again, click the link in the bio. You already know. Get your free stock. You know what I mean? If you want $100, open up a high yield savings account with Allah. Click the link down below. All that good stuff, man. And make sure you tap in, man. You already know what time it is. Let's go out here and get this money.